Hey, welcome. We're going to go ahead and get started. Looks like folks are trickling in. Let me get the presentation going. My name is David Johnson, and as soon as I figure out how to put the presentation up here, we'll go through that. Yeah, so we're here to talk about the crypto charitable giving in a bull market. The context here that we'll talk about in a minute is really an unprecedented time in terms of the price action we're seeing within crypto, which has implications for giving both for donors and charities. So my name is David Johnson. Like I said, I'm a lawyer here at the Giving Block and do a range of other things. The Giving Block is really a platform that helps charities receive crypto donations. We've expanded to do other assets. And additionally, we help donors through what we call our private donor services. We have 2,000 charities, and then the donors that give to those charities are also, in a sense, our clients. That's primarily what I'm going to be talking about today. Our charities that we have on the platform include some of the logos there you see on the screen, like St. Jude's, United Way, and many other, primarily in the US, but also globally. So just a few caveats today. We're primarily going to be talking about things from a donor perspective. If you're attending and you're a nonprofit, please stay on. It'll be interesting for you, I imagine, to hear about how donors are thinking in this market about giving. And is primarily geared towards, again, donors and their advisors, primarily US based. Some of these same concepts may apply in other countries, but for the most part, US is fairly unique in its treatment of charitable giving for tax purposes. So that will be the focus today. So just a bit about context. I've updated this chart a few times in the last 24 hours and just sort of gave up. We're kind of in the 97, $98,000 range for Bitcoin, but it's been going up a lot. Bitcoin is um, the not the only crypto asset. There are many other crypto assets, but Bitcoin is by far the largest. So in this chart, you'll see Bitcoin is over 50%. There are other categories, but primarily Bitcoin is the one we talk about. So you'll notice even in this last chart where I talked about the price of 97, 98,000, that's the price of one Bitcoin. People tend to use that as a marker for how popular the crypto market is as a whole. So we'll be talking about Bitcoin, but this applies to many other crypto assets. So this isn't really a sales pitch for crypto or Bitcoin at all, but I'm going to be talking a bit about the price appreciation for crypto because it does impact the tax implications of giving. So in this chart, you can see the purple line there being Bitcoin is actually outdated. That number has gone up quite a bit since then, but it gives you a sense that even though Bitcoin has been very volatile, lots of ups and downs, when you look over a multi-year horizon, if at almost any point in the past you've invested in Bitcoin, it is most likely your most highly appreciated asset. So the next highest down there, the orange marker there, the orange line is the S&P 500. It's done very well over the last 5 years, but compared to Bitcoin, you'd have, excuse me, much more appreciation in the Bitcoin than the traditional assets. So we're gonna have a little pop quiz here. It's not automated or anything, so you'll just have to answer in your own head. If you were to guess if all of crypto as a whole, as an investment class, were itself a company, where would it rank in market cap? So how would it compare to the largest companies in the world? Third largest, ninth largest, or 27th largest? Um, there's always a moving target, but let's look at, for example, the 8 largest companies here, and crypto would slot in as the third largest currently. So right behind NVIDIA and Apple, larger than Microsoft, Alphabet, Amazon, Saudi Aramco. And what if we looked at just Bitcoin? Again, back to this chart. Bitcoin would slot in here as a sixth largest company. So again, Bitcoin is the largest of crypto, not all of crypto, but that's kind of how they fit in terms of and in terms of size relative to these very large, well-known companies. And what does a crypto user look like? Within the US, over 16% have or have either used or continue to hold crypto. Of those polled who say they are planning to purchase crypto in the next year, 47% were women. Also, among racial and ethnic groups, there's very wide adoption. So don't assume you know when you're thinking of clients or donors, don't assume you know what a crypto donor would look like. Um, Among wealthy investors, if we look, for example, at millennials who are millionaires, 83% of them hold some crypto, and of those, 50% have 50% or more of their portfolio in crypto, and over 30% have 75% or more of their portfolio in crypto. So very large holdings, especially among millennials. When it comes to investing, it's not that they're sprinkling in 1, 5, 10% of crypto. Some of them have very, very large crypto holdings. Many of them have very large crypto holdings. The other thing to note is I think the poll that produced these numbers is about a year old. And just by nature of crypto having appreciated, these numbers are actually probably much higher because investors will often hold on to their winners, and that crypto size of their portfolio, portion of their portfolio, will continue to grow relative to the others, and they're often not rebalancing portfolios. So that's sort of the first part. It's kind of background on what crypto is doing, what a crypto donor looks like. The key takeaways here. Again, this is really focused on advisors primarily. Many of your clients have very large crypto holdings, and crypto is likely one of their most appreciated assets. And next, we're going to jump into taxes. Exciting topic. So catch your breath, get a stretch in. We're going to start with another quiz. According to the IRS, cryptocurrencies are securities, currencies, property, or a must-buy investment. And the answer is property. So crypto is very much like stock in that it's treated like property with the IRS. And what that means is, unlike any other transaction where you were to sell property that has appreciated in value, you'd pay a capital gain. When you donate as a donor, you avoid capital gains on that appreciation. So when you make a donation, you avoid the capital gains. Charity can receive the full value of the donation. The donor, of course, gets the full deductibility for that same donation. And if the donor wishes to still hold, let's say they have Bitcoin at 50% of their portfolio, they still want to maintain that portion, they could immediately step up their basis by purchasing the same amount that they had donated. So this is just a graphic demonstrating, if donor A were to give in crypto, which we would strongly recommend, versus a donor who has the same holdings but sells it first and then gives cash, that donor B would be paying 276.9 thousand in taxes, and then the charity would be getting a relatively smaller portion of the donation. So key is sending on that donation in kind versus liquidating it first and sending on the cash. When it comes to valuing a donation, it is for deductibility purposes, it's the time of the donation at which the valuation is made. And again, the most highly appreciated assets are what you're going for. So ideally, and recognizing no one can really time the market, but what everyone is trying to do is select their most appreciated asset, or what they should be trying to do, select the most appreciated asset, whether it's crypto or in some cases it could be stock. Donate that asset when it's at or near a peak. And then again, if they want to maintain their holdings, they can always repurchase. So that would be the strategy. And we happen to be in kind of a perfect storm, I like to call it, where we have a bull market with the Bitcoin and other crypto markets going up very rapidly in the middle of giving season. We're coming up on December, which is when the vast majority of charitable donations are made. So it's the perfect time. Another interesting thing is, again, you're really trying to time, in a sense, time the market and time your giving relative to the current calendar year. And in many cases, donors just haven't had time to think through exactly where they want their funds to go, especially with very large holdings. It's a big consideration, which charities they want it to go to, how much. And so one option is to use a donor advised fund. Donor advised funds, as you may already be familiar with, are effectively charities themselves that will take the donation immediately when it's made by the donor, but then they hold it until the donor directs them to grant it out to qualifying charities over time. That can be over a period of many years. So the deductibility happens in current year. So let's say I have $1 million worth of Bitcoin. I can put it into a DAF now. For tax purposes, that's identical to donating it to a charity now. So I've sort of have that win there. The DAF balance gets invested and grows over time. It's in my name at the DAF, but gets invested over time. And then over time, as I direct, say, send $100,000 to this org, $100,000 to that org, it gets distributed to charities. So the Giving Block works with a number of different DAFs that will receive donations in cryptocurrency. All of them or almost all of them will liquidate that, and then they use the cash to either buy stock or put it in whatever asset they want to hold it in, typically not crypto. We have a relationship with Renaissance Charitable, which is a DAF, and they have what we call a crypto DAF that allows the donor to donate in crypto, leave it in crypto, and it grows in crypto until it's liquidated and then sent out in, it could be subsequent years again. So back to my example, I donate $1 million of Bitcoin. That Bitcoin could stay in, $1 million worth of Bitcoin, ideally grow over time in that DAF before it's distributed. So if that is of interest to you or any of your clients, please let me know and we can connect you with Renaissance Charitable and get that set up. So next I'll go through some of the common pitfalls, some of the practical considerations framed as pitfalls that you really want to avoid. The first one may seem obvious, but actually it has been a problem for folks who are not aware, and that is you just need to keep very clear records of crypto transactions. Every sale of a cryptocurrency is itself potentially a taxable event, likely a taxable event, and the purchase of that is what determines the capital gain calculation on that sale. So all the buys and sells are themselves very critical to keep track of, and of course the timing of those for capital gains purposes, whether it happened within the last year or not, is critical. So the nice thing is that there's a very easy answer for this. There are a lot of good software companies that do accounting and tax calculations specifically for cryptocurrency. I put some logos there on the page. Those are not endorsements necessarily. They're could be half dozen, a dozen good ones out there. These are just some examples. Another common pitfall is a lot of times donors and or charities want to sort of do things on their own by setting up a wallet and taking cryptocurrency. There are, of course, like in any situation, there's potential for scams and fraud where someone could insert themselves or pretend to be a donor or charity trying to get access to funds. And so while there's nothing wrong with a charity or donor working more directly, we strongly advise making sure security protocols and the like are in place. So some examples of how we implement that is the Giving Block is a part of Shift4, a public company wholly owned by Shift4, and Shift4 is a payment processing company. So PCI controls and a lot of the security standards and the like that our parent company is involved with related to credit card payments and the like, we've been able to leverage some of that in developing protocols and having standards in place. For example, for very large donations, we might even require the donor to get on a video call with us, send some test donations, and just verify that they are who they say they are. We might check in with the nonprofit for very large donations from donors, make sure, hey, do you have a relationship with this donor? Do you know them? How long have you known them? Just make sure that there's a bit of trust involved. Even in some cases where it's an anonymous donor, which does occasionally happen for very large amounts, we may work with an intermediary like a professional service professional that they work with that we could contact even if the donor themselves doesn't want to be identified. The next is maybe the biggest one, and that is everything I've been saying about the appreciated value and the charitable deduction for donors. That all assumes that the donation is made in kind directly to a charity. And is often lost on people who think that the donor could either, the minute before they donate, convert to US dollars and send US dollars, or that the charity could have the donation sent to a for-profit company or someone else and then receive dollars. In both of those cases, it's not a donation in crypto. So without donating in kind, that all the benefits of capital gains and the like that I described above would not apply. So charities need to receive that directly, not liquidated proceeds. Um, there are options to work with charity partners. For example, we work with America's Charities is a good one where if we are processing a donation on behalf of a charity that's not already signed up with the giving block, that doesn't have, like in this illustration I put on here, we've got St. Jude's with their tax ID and everything on the giving block website, so that's directly where it's going. There are donors who say, I want to give to this charity that's not on your website. We can work through America's Charities or other charity partner that would actually be similar to the DAF I described. They would actually be receiving it first and granting out to the charity. So that's another option, but either way, it has to be a charity that's receiving the donation in kind in crypto. The other mistake would be not getting an appraisal. So the rule from the IRS is that any donation in property, including crypto, over $5,000 requires a qualified appraisal, and that qualified appraiser cannot be a party to the transaction. This is lost on a lot of donors who just know logically that the price of crypto is fully public and transparent. We can go right now online and see what Bitcoin was, pick a random 113 days ago, go see exactly what the price was on that day. So we logically shouldn't need an appraiser to evaluate that, but that may change over time. We're actually actively working with some lobbying groups to advocate for an exception for crypto that does exist for stock, where you know what Apple stock is, you can make a calculation without requiring an appraiser to go produce a report. But for now, that exception applies for stocks. It doesn't apply for crypto. So crypto does need to be appraised. The other point is that liquidation value is not relevant at all. Donors and or charities often say, you just gave me a Bitcoin. I liquidated it for $95,000. Clearly the value is $95,000. Yes, the value will be close to that, but the evaluation does not depend on liquidation. Liquidation could happen a day later, a week later, even immediately. Either way, technically the liquidated value of fiat after receipt of crypto is irrelevant to the evaluation of the value from a qualified appraiser. So receipts, for example, should really only show the crypto that's received. That's something that the Giving Block does for all of our clients, is produce receipts that just say, for example, you received one Bitcoin. We'd never say you received $95,000 worth of Bitcoin. Always reference just the crypto amount. And the other thing to note is appraisals don't have to happen immediately. They don't happen before or necessarily immediately after a donation is made. It's just something that you need to have done before you file for that calendar year. So typically we recommend waiting until the end of the tax year. And then before April 15th or October, in the case of extension, we can help you get that appraisal. So the qualified appraiser is something that the giving block actually covers the cost of. I mentioned earlier the appraiser cannot be a party to the transaction, so we're not allowed even to have a CPA on staff produce it. But we do have a good qualified appraiser we work with. We can make an introduction, and actually we can cover the cost of that as well for our donors. And the other common pitfall number 5 is just not having the documentation lined up. So this includes the appraisal report, but also IRS requirements around the receipt and specifically the 8283 form. So the 8283 form is something that, in the case of donations to the giving block, we produce that. But either way, the donor is responsible for having an 8283 form filled out. If it's over $5,000, again, it also has to be signed by the appraiser, and the appraiser puts the value in. The charity also signs confirming receipt. And in addition, while it doesn't have to go in the tax filing, donors will get a report from a qualified appraiser that lays out how they came up with the value, and that should go in the donor's files. So again, these are all things that the giving block can help produce through our platform. But if a charity or donor is not working with the giving block, then these are all boxes you'll want to check, make sure you have covered in another way. And finally, I just have some overall points about working with crypto clients. For those that don't work with crypto clients day in and day out, just some overall comments, because there may be some differences about how to approach them, and how to work with them. So that includes, for example, I talked earlier about the demographic of crypto holders. Don't assume that you know what a crypto holder looks like. Ask in the case of any nonprofits joining, make sure to ask your donors if they have crypto. If, for example, someone gave a large cash donation or is talking about giving a donation, just say, hey, are you aware of the benefits related to giving in crypto or stock for that matter, particularly times now where there's been a real run up in price. They may not have any awareness of that. You could be both saving them a lot of taxes and increasing the amount of charitable deductions overall. So I guess related to that, ask about charitable giving plans, and what appreciated assets they might have. The other note is that crypto holders tend to be very privacy and security obsessed. There's a way in which crypto requires the user to be more involved in managing the asset and their security relative to, for example, a bank account where you kind of rely on the bank to do everything. In the case of crypto, holders are managing private keys and the like, and often are very sensitive about telling other people where their crypto is stored, or maybe even the balance of it. So obviously, if you're in an advisor relationship, presumably they will be comfortable providing some of that information, but just be aware if someone a donor is being a little bit cagey, or seem to not want to open up completely about exactly what's held where, when it was purchased and all that. Some of that is just a cultural thing, and you'll just kind of want to talk through that with them. And finally, if you're not a deep crypto expert, that's perfectly fine. I don't think any clients would expect you to be, but they definitely are going to expect you to be able to talk about it, to be able to start talking about it. I mean, asking questions is perfectly fine. Again, you're not supposed to know all the answers, but being able to ask questions and engage. And finally, number 5 is you consider buying a small amount. I don't say that at all as financial advice. I mean a small amount. When I say a small amount, it could be $10, but just going through the action of seeing what it's like to have a crypto wallet, to manage that, to go on an exchange, make a purchase. There are some very user-friendly wallets like Phantom, for example, that would make it super easy. Even getting familiar if you did have larger holdings, with using cold storage and what that's like with managing keys and all, it can be a little daunting if you've never done it before. But after doing it a couple times, going through it, clicking through it, I think it is the best way by far to get to know about the market. And there's something about even a very small amount of, say, $10 that you see go up to 15 overnight, and you start to pay attention, and that just puts you in the conversation with clients and folks. So really not pushing anyone to make a large investment, but I think just dipping your feet in and getting some familiarity with it is often the best way to be comfortable talking about it with clients. So it's kind of the end of the prepared remarks. If anyone has questions, I think we have a Q&A that we can drop in the chat. One of the questions I see is about the valuation of crypto for qualified appraisal purposes. And so that's I touched on it already a little bit, but I completely agree. It seems illogical and unnecessary, but the IRS currently, we've heard, is enforcing it. We've heard of many donors who are not filling in and not having appraisals made, maybe intentionally or because they didn't know. And we haven't heard of those necessarily coming back to bite them, but we have heard of some cases where the IRS was enforcing that. So I wouldn't rely on that. So definitely get qualified appraisals for any crypto donations or any other property donations over $5,000 in value. Any other questions? If not, then I think we'll leave it there. Thanks for joining. And please do reach out by email, or the link and QR code we put there is specifically to the private donor services. And the private donor services it basically is everything that the giving block does that's not automated through our form. So in many cases, a donor wants to give $100, $500 through our donation form, find a charity on our website, all that is just fine. But when we have larger donations, maybe an obscure cryptocurrency asset, or a $1 million donation or more in Bitcoin, they tend to want to have a little more hand holding. We get involved. Private donor services help do that, as well as lining up appraisals and many things I talked about in this presentation. So that's summarized at our private donor services page. Also send me an email, david.johnson@thegivingblock.com, and be happy to work with you. Thanks.